Real estate or equity, right? This is a question which has been plaguing investors for a very long time, and I have been always saying that you make money with your brains, not necessarily the asset class doesn't matter, right? Bill Gross made in managing debt funds. Buffett has made money in far more money in insurance and money management. Soros has made money in trading. Niranjan Hiranandani has made money in real estate. Uday Kotak has made money in banking. Deepak Parekh has made money in funding houses, right? So each person finds his own way, but largely the wealthier feeling is something which you get only when you have your company listed, and that gets a respect of 30, right? So that means a high PE. That is when you create the maximum amount of wealth, right? So now if you go, I keep giving this example to students. If Rakesh Jhunjhunwala and Niranjan Hiranandani were to wake up one morning with each other's portfolio, they would require hospitalization, right? Rakesh Jhunjhunwala does not believe real estate is a way of making money, and Niranjan Hiranandani fairly obviously has made a lot of money in real estate. I am not very sure what is the size of his equity portfolio, but I am assuming his real estate portfolio is much bigger than his equity portfolio. Having said all that, should you invest in real estate or equity is a good question, because I don't think anybody has made money by keeping all the money in savings bank account or bank fixed deposit. That can't happen, right? So you have to get a return on your investments, and both real estate and equities will give you high standard deviation and a decent kind of a return. Obviously you need to have skills for both. For some people, some real estate in some locations work, in some locations it doesn't work. So let us look at what are the advantages, or why you should what you should choose. First of all, it's a matter of your own personality. For example, I would hate having a string of real estate properties, talking to tenants, potential tenants or potential buyers so that I could buy, sell. I hate the whole process of dealing with real estate, whether it is buying, selling, or whether it is looking for a renter or a tenant who will pay rent regularly and who will not crib about so much of maintenance and blah blah blah, right? So I wouldn't want to have that route of having 5 houses and running from one to the other, which means you're doing the work of a carpenter, plumber, etc. You become more a real estate manager than enjoyer of real estate. So I don't like that, but there are some people who love it. There are some people who love the process of buying and selling flats and saying, oh, I bought this for so much, I've given it on rent, this is the rent that I'm getting and this is the price at which I will sell. They can talk about it throughout, day in and day out, and they would have 5-6 properties, each giving them differential rent, and they feel very proud when they drive by that place and they'll say, Subra, you see this house, this building, I have a house here, I've given it on rent, I get about 2.5 lakhs per month as rent. Very good, great, right? So then they would drive and show and say, oh, I saw one property here. They can just talk property all day. So if you are the types, maybe you should be a real estate and you should be a landlord. But there are people like me who hate the process. So we are better off in equity than in real estate. Second, in real estate, you feel you're in charge. You're the CEO of the property that you bought. You can paint it up. You can do it up. If it's a house, you can even furnish it, right? You can do all those kind of things with real estate. You think you're taking charge and you're handling it yourself. How much money you make on that is a function of how well the economy does in that region. How many young boys and girls want to come and live, or older people want to come and live because there's a school, very good quality school, whatever reasons. Those are the things which drive it. But yes, you feel as a CEO you're in charge of that property. You also feel that it is tangible. You can touch and feel. You can say, this is my house, right? That kind of a thing. So 4 or 5 houses, all giving you rent could be very satisfying for some people. For some people, no. For me, no. I would rather look at my portfolio and see my dividend rather than looking at at my real estate. I don't like real estate as much as I like equities. So you are one more advantage or disadvantage as you see it is that in real estate you will always get leverage. You will never have to pay 100 rupees to buy a property. The question is, do you want to borrow 90% or do you want to borrow 50%, right? So when interest rates are going up, it is better to be borrowing, and because you are going to repay with a lesser value of money. But when interest rates are going down or they are at best stagnant, a leverage may not help so much. But a leverage can also hurt you during a recession. So you have to remember all that. Leverage, which looks very good when you sit down in Excel sheet and do all those projections of seeing how you can buy a flat every 2-3 years because of the rents which come in. Yes, after some time it could become that you could buy one flat every year. But the question is, are you a real estate manager or are you a owner of property getting rent, right? There are some advantages in tax, but all that have been plugged in. So if buying real estate for tax benefit today does not make any sense at all. Like I said, a tangible asset, which is many people feel it is easier to analyze. In fact, doctors come and tell me that they prefer real estate because they understand real estate better. And in real estate, you can talk to somebody and find out whether that value is good. I think this is a fantastic reason what a doctor said as to why doctors prefer real estate, apart from the fact that it can use up cash. It used to at least use up cash. Now it's not too great on that count. But yes, you can't be sold a lemon. Whereas in a unit-linked pension plan or a unit-linked insurance, you have no clue what you have been sold. Whereas in real estate, you know approximately, yes, maybe I'm overpaying, but I want this location. Those kind of things. You at least understand what you're doing much better than the financial products. Financial products, we have made it so complicated that forget doctors, even investment professionals don't understand the kind of products which we have created. So yes, easier to analyze and qualify is definitely there. One other advantage or disadvantage, maybe it looks like an advantage, is you don't have price being thrown at you randomly every day. Nobody calls you up and says, oh, 2 crore ka jo property liya today, it is 185 or 215, whatever, because you're indifferent. You bought it, you're staying there, or your parents are going to stay there, and you're going to keep it for a very long period of time. So how does it help knowing the prices on a daily basis? In real estate, nobody keeps throwing prices at you. Of course, there will be somebody asking you to take a mortgage and things like that, but nobody is pushing you to do the deal, right? So this is all nice things I said about real estate. Of course, it has its disadvantages also, but more than that, let us now talk about the advantages of equity. Equity could be direct equity or it could be equity mutual fund. If it is an equity mutual fund, you will pay some management charges, but lo and behold, you will not pay any other tax, which means you will shift everything to a growth phase and you will withdraw the money when you need it. So there is no dividend, there is no money coming to your account and sleeping there, and in the worst case scenario, which has happened now, is paying tax on the dividends, right? So if you're going to pay dividend tax and all those kind of things, you might as well put into an equity mutual fund on a growth plan and let it lie there. That means you don't even have dividend income on which to pay tax. Second advantage I see in equity, you can buy 1,000 crores worth of equity, you can buy 500 crores, 200 crores in a day, buy, sell, do whatever you want. Other than you and your broker or maybe your employee, one employee who does your transaction, nobody else knows what you're doing. But can you imagine if Rakesh Jhunjhunwala were to buy a property for 1,000 crores? Maybe as a percentage of his net worth, it is very small, but the whole world will know about it, right? Everybody will know who has bought it, why they have bought it, and all those kind of questions will come up. Right now, well, all the questions are not coming out even in public interviews. All those kind of questions are not coming. Questions which Rakesh chooses to talk, yes, those questions come out. But welcome to Subramani. Happy Diwali at the outset. So maybe I should have posted this earlier, but a very small lesson in risk management came to me from my daughter's teacher, right? I have a few decades of cracker bursting experience, but now I've stopped for a couple of years, maybe 5-10 years maybe I've stopped. But this is an incident which happened before that. When my daughter wanted to burst crackers, she said, my teacher has said that I have to carry a bucket of water when I go to burst crackers. Because something could go wrong and you might need water there. So I had never done it through school and college, and even later I had never carried water. But we did carry, because her teacher had said so. We did carry water. So we burst crackers over 4 days. So on the first day nothing happened, so the water was poured onto the plants. On the second day again nothing happened. So my daughter asked me that on the third day, look, should we carry this water? Nothing happened. So then she looks at me and believe me, she was in class 6. She looks at me and says, oh, but yesterday nothing happened, but today something could happen. And she decided to carry the water. Far away, my brother-in-law, my niece, my brother-in-law's daughter had gone down to burst crackers and put her hand on some firecracker, and it was obviously burning, and she went all the way up to the 9th floor because she needed water, right? So immediately my daughter said, look, if she had carried water, she could have found it immediately there. I said, absolutely. And on the 4th day, one girl stamped on a cracker in our building, and this water was useful because she could immediately put her leg in the bucket. This was very useful. So one amazing thing which all of us can learn is, you have to take the risk cover before the journey starts, right? You cannot say, I will take the risk cover when it happens. You have to take it much before in advance. And one thing I will tell you, this is from personal experience of 3-4 friends. When a major illness hits, and believe me, it is hitting a lot of people now. After a major illness hits, or when a major illness hits, the first thought that comes to a person's mind is, I wish I had more term insurance and I wish I had more medical insurance, because suddenly you're uninsurable for whatever reasons, whatever has happened. Like for example, if you have had a heart trouble or things like that, you cannot get insurance in this funny country, even for a accident which you could potentially have. So if you have had a heart problem or a kidney problem or cancer, you cannot get insurance, which means you cannot get insurance for falling on the road and breaking a leg. Sounds very odd, but it is true. So take insurance before the journey starts. You cannot start a plane journey and when there is turbulence you look for an insurance policy. It doesn't work that way. You can't look for a parachute after the turbulence starts. You better carry the parachute in advance, right? So similarly, risk cover or a bucket of water has to be taken immaterial of what you think will happen. We have absolutely no ability to predict the future. So take your risk cover before you start the journey, right? Thank you.